Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, as usual, nothing discussed today is financial advice. This is just for educational purposes only. Now that's out of the way, we've had a little bit more fun on the old Bitcoin chart, haven't we? So today we're going to run through what's happened, where we are now, and what I am looking for next in terms of trade setups. So obviously, last week we were talking, and where were we? We were Thursday. So we were here last week. Since then, we've had another significant rise to the upside, which was on the Friday, which was a nice just shy of 10% day. And then we're consolidating up here. So what we can look for, first and foremost, is throw on the range. And we can see what we're going on here. So obviously this is the range fib tool. We've been talking about this now for months and months and months. In fact, since effectively June last year. And we've had a nice reaction from the outside of the deviation. So obviously this is why we created this range fib tool. Because it not only captures the range itself, but it also captures the deviations that we get. And last week's video, we were talking about if it does continue up, then first and foremost, we're looking for a reaction at this first standard deviation, which we didn't actually get. We ended up just going straight through and then hovering around this level. It was very sloppy level in the end. So therefore, there were counter trades to be taken, but they were just short in and out scalps. And then last night, during last night's FOMC meeting, we came up and we just slightly front run the top side of the outer deviation. So, you know, up here was a good place to short, and this is what we were looking at yesterday in the group. So in the group yesterday morning's update, I always give my trading plan to the guys every single day of the week, Monday to Friday, talking about what I'm looking at next and the levels that I'm looking to trade. And part of my plan yesterday was, as you can see there on the screen, locally above, we have the macro range outer deviation around 29k. The next level above that is the weekly at 29.8k. So there were the levels that I were interested in. So we can see here the outer deviation roughly around 29k. And this is what we're looking at. The other thing that was aiding my bias to take out the highs was the fact that, as I posted in the group once again, we had poor highs across the board. So we had several days in a row and we've just got poor highs across there. Now, what do poor highs look like? Well, if we come out of this screen and we go into the TPO charts and we look at this, we can see this. These are the TPO profiles for each day. And what you like to see on a good high is you like to see one of these boxes, one of these blue boxes. This is called a selling tail at the highs. On the bottom, it's called a buying tail. On the top, it's called a selling tail. Now, this is the sort of stuff, by the way, that I teach in the advanced course. So what we could see here is we had... This was yesterday's profile. This is today's profile. So we had Tuesday, Monday, and Sunday all giving poor highs. So we had no selling tail on the tops of any of these. So for me, that's a bit of a sign that this is an ugly high. And the likelihood is we run these highs as either A, swing failure pattern, which that's how it happened in the end, or B, it just continues up. Okay, but in the end, we got the swing failure pattern. So we came up, we took the highs, hovered around. Obviously, the news event caused a spike down, a spike back up. Take the highs one more time because this did actually create another poor high right here. So there was a chance that that was going to be taken out. In the end, it did get taken out and we reversed back down. So this is why I was explaining to the teams that I was looking for those highs to be run. Now, the other thing that was kind of aiding my bias in this trade setup was the fact that all over Twitter, and even some of the crypto YouTubers, all were talking about 30k. So as you can see here, they're sort of posting again in the plan updates, 30k is on everyone's mind. We either front run this or go straight through it, because that's typically what happens when everyone's watching the same level. And if you've been around the space for a while, you should understand this. But if you're fairly new to crypto, then this is probably a bit of a strange concept to you. But when everyone's looking at the same level, likelihood is Bitcoin will do either one of two things. It'll either front run the level or go straight through it. Now, the thing is, the 30k level, there's not much confluence at the 30k level. Okay, there is some confluence, but there's not much. So if we throw on a volume profile into this little consolidation here, you guys know that I like my volume profiles. We do have a point of control there, and there is a weekly level around the same area, but there was too many eyes, in my opinion, on that level. So the first attempt up, don't get me wrong, we could still go back up there. You know, we either front run it or we go straight through it. Okay, and in the end, we front run it. Okay, So that's what we were looking at yesterday. Now, on top of that, we did have another reason for a short up here, and I'll explain that in a minute. First and foremost, what we're going to do is we're going to look at today's video sponsor. Now, today's video sponsor is Prime XBT. If you don't know Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. Now, this is the platform that I personally use to trade stock indices, commodities, and FX. The beauty of these guys is you can use crypto as collateral, so you can either use USDT or you can use Bitcoin as collateral. Now, if you guys do want to trade with these, I do have an affiliate link down in the description, and if you use our link and you use our codes, then you can get up to a $7,000 bonus, deposit bonus, and if you use the second code, you can also get 25% off your trading fees. Okay, so obviously if you guys want to check out Prime, then go down and check out the link down in the description. Okay, back to it. So the other thing we were talking about up here is we've got a brand new strategy that I've created in the group. Now, what we can do is we'll get rid of this and we're going to throw on this. So this is the strategy that I've created in the group. Now, this strategy was created on the back of our last live streams. So obviously, if you don't know, then we do have a website, spitfiretraders.com. On here, you can get access to our free Discord. You can learn a little bit about us. You can check out our co-pilot's course. You can check out what to expect within the actual course itself. You know, we've got over 80 hours of education. And if we get rid of this screen and we actually go into the course, we can see that the last two modules we've had are strategy building and backtesting. And this is basically where I run through with the team on how to create your own strategy, because I teach a lot of things, as you can see here. I teach a lot of things because I'm a Confluence trader. So therefore, what I like is I like multiple levels or multiple forms of technical analysis to overlap to give me a better trade opportunity. Okay, but I also understand that you might not want to trade with all these different forms of technical analysis at once. You might only want to trade with one or two of them, and you can still build winning strategies using a couple of these methods. That's the beauty of it. So what I've done is I've created this stream for the guys on how to build your own strategy using what I teach and how to backtest it, including calculators and everything. Now, the guys wanted a follow-up for this stream, so on Tuesday, I showed a new strategy that I've just created. In fact, I actually created it on the back of the last stream. And I ran through how I built it, how I started it, the ideas, and all the steps that I took to improve it from the initial results to where it is now. Where it is now is it's 72% hit rate. And I've got all the statistics behind it. Now, that same strategy that we were looking at on Tuesday's live stream ended up giving us a setup for last night, which is this. So this is the setup that it gave us last night. So the entry criteria being up here. And then from the results that I've got, the backtest and the forward test, then I can safely say that if we get a reaction at this point, then there's a 72% chance that peer will then return to this spot here. From that, there's a 63% chance that we'll get down here. And there's a 46% chance that we'll get down here. And in the end, so far, we've had this portion play out. Now, I'm not saying that these will happen, but as we can see here, there's a 33% chance that we will get down to this level, and there's a 19% chance that we'll get down to this level. So this is something that I'm quite strong on within the course and the way I teach, is the fact that I don't just give strategies and how to understand TA and how to learn order flow, etc. I'll also give you the statistics behind it, because I'm quite anal like that. And trading at the end of the day is a game of probabilities. And if you can't safely extract your probabilities from your own past setups or your backtesting, then you know you've got no statistics. And this is why, again, journaling is very important. So this is the trade that we ended up taking in the end. So played out in the end. Again, completely irrelevant what the news outcome was. You know, the FOMC last night, you know, everyone on Twitter was bullish, no matter what the outcome, whatever Powell said. Everyone was expecting price to go higher. And in the end, it sold off. And we sold off because we were at resistance. Obviously, we had this resistance. And then we had the outer deviation resistance. So either way, I was not going to, like some of the degenerates, I was not going to long up here into a resistance zone. What's the point? And even above that, as we said, we've got more resistance just above it. Okay? So let's move on now to what could happen next. And by the way, if you want to learn that strategy, then check out our course. It'll cost you the grand old price of 60 Great British pounds. Not bad for over 100 hours worth of content. So next, what can we see? Well, first and foremost, let's throw on a volume profile here within this section, which is obviously for the range. Now, the reason why I've only drawn it up to here is because we've exited the range here. We're now into the deviation territory, so therefore the volume profile will now sit here. And then we've got a volume profile up here, because this is the last consolidation. So this is the difference between, you know, how I teach and how others teach. You know, some people will call this a supply zone, order block, whatever you want to teach it. At the end of the day, it's the same goddamn concept. Okay? It's the same goddamn concept. All it is saying that there's a cluster of volume here, which you can quite easily see without throwing anything on the chart. You can see you've got a cluster of volume here, which then means that this is natural resistance. Okay? So what I'd be looking at next is either A, if we get another push up, we can look to take out these highs and we get another swing failure pattern of the swing failure pattern, which can happen. If that doesn't happen, then I'd be looking for price to rise up into this zone here, around that 30k zone, and finally giving people what they want. Okay, at that point, then we take a decision. Do we change market structure and start coming back down? Well, in that case, you've got a short trigger. And if not, if you get naffle reaction, then just let it ride up. Okay? If we do let it ride up, then we're just getting back into the old, zoom out here, into the old range. Okay? Then you're trading the larger range, and then you're looking for your individual consolidations within that. So obviously we've got a sticky resistance there. Okay? So that's what happens. Right, let's zoom back in again. Let's go back down to the 1 hour chart, shall we? In fact, no, we'll come back out to the 4 hours so we can get that volume profile in. Right, okay. So, to the downside, if we do not hold this deviation level, then I'll be looking for price to roll over. And if it rolls over, the first region I'm going to be looking for, and a lot of people will probably try to defend this region, the old range, macro high. Okay, so you have got a bit of a zone here, and the reason why I say this is a zone is because you have got the macro region high there, the macro range high, sorry, but you've also got this consolidation block just below it. So if price does end up coming down here, swinging in, grabbing this liquidity, coming back up, reclaiming, then you've got a long trigger. Okay? If not, if that doesn't happen, and it does just roll over, then you'll be looking back down, first and foremost, to this overall value area high, which lines up with the monthly open. Okay, and we can see here, we've got a high volume node right here. Okay, if that doesn't hold, then once again, you're looking back down at the EQ. Okay? So the main levels to be trading right now. So to the upside, you've got the overall highs / that 30k level above. To the downside, you've got the main range highs. Okay, so that's what you got. Now we can also zoom in and get a little bit more granular here. So if we go into the 15-minute chart here, let's get rid of these two dots and let's get rid of this old volume profile as well. Let's get rid of that one and that one. Now, internally within this, something to be aware of is we also have a point of control just above us. That didn't work, did it? Let's try that again. Very locally. Again, this is for low time frame. Why is this not working? My mouse is playing up something rotten today. Oh, come on. Let's try like this instead. There we go. So, to the upside, we've got to be aware that we've also got a point of control just above us. So if we do end up having another stab up here, why is my mouse being shitty? If we do have another stab up here, then we've got this point of control here to contend with. If it gets above that, then we've got the previous day point of control up in this region here. Okay, so that's very locally, so that's for your low time frame trades. Okay, I'm still holding onto this short from up here. I have taken some profits. My stops are at entry, so if it does come back up here and I get stopped out, no problem at all. I'm still holding my longs from lower. But yeah, that's it. It's just level to level, okay? So obviously make note if you're trading on high time frame, low time frame, but what we've gone through today, mainly high time frame levels, okay? And obviously if you guys want to learn to trade like us, then come check out our website. Right, that'll do. If you've enjoyed today's video and you've learned something new, hit that like button, let us know down in the comments, and consider subscribing if you're not subscribed. All right, guys, until next time, as you were, bye-bye.